Welcome everyone. Welcome to this episode of Budget Ki Baat. I have with me Mr. Ramesh Mantri from White Oak Capital, and once again we are going to discuss the most talked about topic right now, which is budget 2025 and its implications on the stock market. Sir, let's start from the top. The macros of the country. Capex was a number that was being talked about before the budget the most. This has been a signature of the present government, wherein we have seen a lot of capex-led growth. How happy are you with the number that has been presented right now, that of 10.18 lakh crores?
Yeah, one is, for the last many years, the government has been doing the heavy lifting on capex, and private sector has been a lot more muted. I think the government would have realized that they have, what is called the capacity to execute on capex. They have sort of, hit that limit, and it has let the private sector now pick up some of the load, right, and rebalance some of the capex, right, and also some of the capex money has also been transferred to states. So we should look in aggregate. So I think considering where we are, I think that's a reasonable number. It had been at a very high CAGR. It's now slightly normalizing. There's no point spending money. It's the capacity to execute matters a lot. What is the quality of infrastructure we build? So free, there's a period of consolidation and we actually start building better quality infrastructure.
Absolutely. Sir, along with capex comes a fiscal deficit number, of course, which has been pegged at 4.8% and then 4.4% next year. Do you think this is prudent enough and it balances the growth versus inflation story enough so that RBI will have some leeway to kind of lower the interest rates? And as we speak, RBI interest rates are expected very soon. So, has the balance been achieved there?
Yeah, so this government over the years have demonstrated the path of fiscal prudence and staying on the FRBM path. It's a credible achievement. They were extremely disciplined even during COVID, where a lot of governments, just blew up their bank, if you can call it, their treasuries. So we stayed very disciplined. Understand spending money is just not an easy outcome. There are trade-offs. You tend to crowd out the private sector. So I think the India story is all about now Indian entrepreneurs. You give them a lot more space. So I think this is a credible, very credible path the government has taken.
Absolutely. Sir, getting to the main meat of the topic, the highlight of this budget has been, of course, the tax swaps that have been given to the public. You barely pay any taxes up to 12.75 lakhs, no taxes till 12.75 lakhs, and then also a lot of relaxations have been there. Now, this will create a lot of extra discretionary income in the hands of public, and that brings out an entirely new story of consumption. So my first question to you is, do you think this is a pivotal moment wherein we are moving from a capex-led theme to a consumption-led theme in the Indian markets?
See, the two angles. One to it, the tax slabs in India, had remained the peak tax slab had remained static under the old regime for, I think, what close to 12 years. So normally, a lot of, particularly if you look at US, the tax slabs tend to adjust with inflation automatically. In India, we have this ad hoc policy of adjusting tax slabs. So the tax slabs, because of the normal inflation work, had become punitive at lower incomes. And now, instead of a gradual adjustment, there's been a one single big move. So it looks like a big move, but it actually should have been more gradual over the years. And I think the income taxpayer in India has paid their taxes, significant growth in direct taxes in India. So I think first time the credit is given back to the taxpayers. There's a recalibration of the slabs, so it's positive. There's a number that's called out, a 1 lakh crore saving to taxpayers, which is a good number. Remember, this impacts, let's say the people who actually pay taxes and their families, right? So it's not like you can't divide it by the population of the country. You're divided by the people who actually pay taxes, right? And number two is on consumption. So since the beneficiaries are like 2-3 crore people, right? of these tax cuts. And these are people in India, if you're in the tax bracket, you are still in a reasonable income category. So the benefit is actually going to be on the consumer discretionary categories. So think of first, one of the things where people like to spend a lot of money is experiences, whether it's entertainment or travel. And when I mean entertainment, I also mean dining, so that's the natural area. Other aspect, of course, is just upgrade their life through buying a better car or a two-wheeler, right? So people will use part of that savings to again discretionary category. There is going to be some benefit of other discretionary categories, including branded products. Hopefully, people will save some of the money, and would hopefully people should be able to maybe split the tax savings, spend half of the tax savings, and put half of that through an SIP into an investment product.
Absolutely, absolutely, sir. Sir, this new consumption side of the story also brings out another question, which is what should retail investors do? Because up until at least recently, for the past few months at least, people have been heavy on the Capex theme with defense stocks, capital goods stocks. PSU not a theme per se because we have a wide variety, but still PSUs have been a darling of the retail investors. From there, and now because of that, another phenomena was the valuations had stretched to a point which was insane. And now after this correction which has recently happened in the market, people have, if not the best, at least better than before valuations for these on their existing portfolios. At the same time, now this budget offers a new rising opportunity, that of consumerism, consumer-led growth. Should they take a bite of this consumer-led growth, or should they average down their portfolio sizes right now?
See, first, over the since the COVID, a few parts of the market had done well, segments including PSUs, cyclicals like capital goods, manufacturing, energy, power, defense. And just because when a sector does well, automatically the share of your portfolio goes up. And then people tend to buy more into that story. So you tend to become imbalanced. And when you think of retail investors tend to operate more on the small cap side. And these themes are more present there. So it's very natural that people have getting overexposed just because of by price appreciation, the fact that they more deployed more capital. I think clearly there is a need to recalibrate the portfolios, rebalance the portfolios. Because of that, and of course, portfolios that become more small and mid cap heavy and micro cap heavy and SME rather than large cap. So I think there's need to recalibrate at two levels. One is, and I'll just give you example of talking of valuations. For example, certain PSU bank stocks started trading at same valuation or premium to one of better run private banks. So you could feel the dichotomy of valuations. So both valuations and just the whole portfolio alignment had got miscalibrated. So there's anyway, even if this budget didn't have this kind of move, there was a need to rebalance because the starting valuations were different and today's valuations were different. And remember, some of these sectors, whether it's capital goods, manufacturing, energy, defense, tend to be cyclical and also a lot more exposed to government policy. So there's a need to manage risk there. And of course, this budget then has been a catalyst to revive the slow consumption environment we are seeing in India. So there is going to be some benefit to consumption because of that. But I think we need to rebalance portfolios towards consumption, financial services, technology, pharma, existed irrespective of what happened in the budget.
Absolutely, sir. Sir, there are a number of other announcements made as well, be it related to agriculture, development of agriculture. There were a number of schemes. We had something for EV sector, lithium-ion import duties were reduced. We also had a number of things for tourism sector, from Heal in India to Udan scheme initiatives. Any of such schemes or announcements that you feel are noteworthy and make any particular sector important enough to keep in watch list for?
I think, most of these are ongoing initiatives of the government, whether Udan is a continuation of the Udan, like Udan when it came, now it's an extension of the Udan. Tourism has been, I would say, not enough priority in this country. That's why more tourists go outside India than they come in India. And by the way, tourism can't be solved at the budget level. There are a lot of elements of tourism that needs to be dealt with. So some of these initiatives cannot be solved. Similarly, agriculture is a very complex topic where land, local administration, state governments, everyone gets involved. So I don't think the center can pull a magic bullet in these sectors. An initiative, something like PLI for manufacturing to most people was actually transformative, right? But I don't think none of these seem like continuation of existing policies. Some, of course, have more budgetary support than others. At least I would want a lot more focus on agriculture productivity and even changing our crop patterns. As people get richer, they consume basic greens less and more protein. And there's in India said to be protein deficit as our dietary habits. So we have to change agriculture priorities. We have to take more people off farms into factories, which again requires a focus on agriculture. Similarly, tourism. This country is amazing. Everything, whether it's the Himalayas, the forests, the beaches, the culture, the art, the music, everything exists in the country. But there are large elements of tourism that we need to solve, and I don't think it can be solved at the budget level.
Absolutely, sir. Sir, moving beyond the present topic of budget, what are some of the key themes that you see emerging in India that should be kept in the watch list?
So, there are, multiple. See, first, India is a growth story. So a lot of things will do well. If you continue to grow at 6-7%, the real question is if, right? We have done very well for the last 30 plus years, and I hope we continue to do them. So if we continue to grow, there's going to be opportunity across the board in India. Some things we need to get right more than others if you have to grow at 6-7%. One, of course, is while IT services kind of been the mega industry that kind of transformed India's image and the whole country, I think we need new, let's say, engines of growth. One of them has to be manufacturing. While we have made progress, particularly on certain spaces in manufacturing, let's say pharma, specialty chemical, auto, and precision engineering, a lot more needs to be done. So clearly, manufacturing is an opportunity. I'm very excited by the indigenization opportunity in defense, not because the defense is a large market, because historically defense R&D has created a lot of new technologies. Let's remember, even the internet was invented as a defense project, right? One of the most transformative technologies. So that's right. The other thing, of course, is we all are part of the story in financialization, money moving from physical savings to financial assets. It's a mega theme. It'd be probably good for 20 years. Consumption, of course, within consumption, it's more about premiumization, people moving up, more luxury, more premiumization than mass consumption. And then this whole idea of being well-being, right? So, pharma and healthcare, India is the world's pharmacy. And we often fail to appreciate that India has, for the quality of healthcare we get, is the most affordable in the world. It's something that we often don't realize. And then finally, one thing, of course, that this government has triggered in the last 5-7 years on the stack of Aadhaar, UPI, is this whole digital and the fact that the pervasive cheap data networks available in India, this whole digital adoption in India. So these are the multiple, a lot of themes, but that's how India is.
Absolutely, sir. So before we conclude, any parting advice from your side to our viewers out there on, it can be related to this budget or something that they must always keep in mind?
See, one I would say is that, everything that we worry about in the world, whether our politics, geopolitics, oil prices, even inefficiency of a government at various levels, our politics. Remember, this has happened in huge quantity in the last 30-40 years. Yet India has done exceedingly well, despite all this thing. So there's no reason to believe we wouldn't do well for 20 years ahead. Will this journey be volatile? The answer is yes. That's how equities are, because if you want to earn double-digit return, potential double-digit returns which what equity has delivered over the last few years. So the important is do not hold back, do not cut your SIPs. In fact, I would urge everyone to actually spend half of their tax savings and put half of that in an SIP, whatever product you choose. So continue the discipline to invest. Remember, in a difficult, we have gone through some market volatility of late. In bear markets, you accumulate more units or shares, and a bull market, actually your value of your portfolio goes up. So this is the time to keep investing, stay disciplined. I'll conclude by, I have twisted one Kabir ka doha, adopted it, कि बुल में सब इन्वेस्ट करे, बेर में करे ना कोई, जो रेगुलर इन्वेस्ट करे, वेल्थ का है ना क्रिएट होए.
Very well put, sir. I don't think I can top that by saying anything. So we'll take a close here, but this was really, really insightful. Thank you so much for taking out time for us, and I hope you'll allow more such sessions in future as well.
Thanks a lot, and wishing everyone a happy investing. Thank you.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.